Good afternoon, everyone. I'm Jim Hodges. I serve as president of McGuire Woods Consulting. McGuire Woods Consulting has over 120 consultants that specialize in government affairs, public affairs, and economic development matters, with offices in Washington, D.C., the southeastern states, Illinois, Texas, and California. For the past few weeks, we have all been consumed with uncertainties related to the coronavirus. This seminar is about sharing what we have seen from government institutions for the last month, what we expect to see in the months ahead, and how it impacts your business. It's also about answering your questions about these federal and state actions. Our team in Washington has been busy assisting clients with specific legislative and agency issues related to the CARES Act and other relevant issues, and analyzing the provisions of bills for the impact on our clients. Our state team has been busy assisting clients in matters related to things like the emergency shelter-in-place orders of our country. Our communications team has been assisting clients in messaging to communities, customers, and clients. And finally, we are hearing questions from groups interested in participating in business opportunities related to personal protection devices and the construction of temporary hospital beds. Now I will turn it over to my colleagues from Washington, Rob Wassinger, Greg Walden, and Amanda Armistead, who will begin our discussion on the federal government response. Rob, over to you.
Thank you, Governor. I'd just like to give a quick update on some of the things that the administration is doing and the direction and some of the things that they expect to have to confront in the future. So far, the administration, working with state and local officials, have conducted over 1.8 million tests nationwide, and they've deployed about 1,200 Abbott machines to hospitals nationwide to confront the coronavirus. The Army Corps of Engineers is building 22 field hospitals, each of which are going to have about 15,000 beds. And they've also deployed 8,000 ventilators from the national stockpile, and there's another 2,000 coming online. They've delivered 11 million N95 masks, and that's going to increase in the days and weeks ahead as well. Also, relevance maybe to some of the people on the call, we worked with the Attorney General and the Department of Health and Human Services to make clear that government contractors working on this and around this would be exempt from the travel restrictions that some of the states have put in place. Some of our clients have had issues, particularly in New Mexico and Texas and some of the states in the South, with getting to their workplaces if they didn't have federal identification. And the U.S. attorneys have all been directed today by Attorney General Barr that they're exempt from those as long as they maintain the CDC guidelines. Also, I talked with the CDC director yesterday. They're extending the CDC guidance through the end of the month. He personally thinks that by mid to late May, we're clearly through the worst of it and on the decline. They've got some aggressive plans that they're pursuing, sort of looking ahead. Focused mostly on getting people back to work sooner. So he has a team of epidemiologists working on getting people that are asymptomatic or that have had the virus and recovered back into the workforce sooner so that we can start ramping back up the economy. That's the main focus of what he's working on now with the task force. That's about it for me, and I'm happy to answer any questions as we go through the call. Thank you.
This is Greg Walden. We live in unprecedented times, and Congress has responded in an unprecedented manner. Phase 1, Phase 2, and Phase 3, which they are colloquially referred to because the bill titles are much longer, all occurred in the month of March. In little over 3 weeks, Congress passed the first supplemental appropriation to deal with coronavirus. Families First, March 18th, that included unemployment insurance, paid sick leave, and family and medical leave, among other items. Phase 3, March 27th. And we'll spend more time on this call. Ryan Bernstein will go through some of the programs in what's called the CARES Act for short. It's just important that the unprecedented amount of money in these bills, and all again within such a short period of time, the agencies, the administration has moved very, very quickly in just since the CARES Act was enacted on March 27th. A number of programs have been stood up and money is flowing. Airline grants up to a tune of $32 billion. Those applications were due on Friday. There's the SBA Paycheck Protection Program, Ryan will talk more about. That's $349 billion. Airlines, repair stations, ticket agents, businesses critical to national security also are eligible for $46 billion in loan and loan guarantees. That program is not yet up and running, but close. And just this morning, the Fed and the Treasury Secretary announced 7 facilities or programs as part of the $454 billion that was authorized and appropriated for such matters, including a Main Street lending program, which has a new loan facility for $75 billion and a expanded loan facility for $75 billion, a municipal liquidity facility for $35 billion, primary market and secondary market corporate credit facilities for $75 billion and $50 billion apiece, and then the TALF, the Term Asset-Backed Securities Facility, which was created in the 2008-2009 economic financial crisis. That's going to be $100 billion. What was said this morning is these are initial monies. If you did quick math, and you'll see that comes to $410 billion, that still leaves $44 billion from that 454. So is there going to be another program? There was no indication that Jerome Powell, when he spoke this morning, that the Federal Reserve Chairman, that there would be another program. So it's more likely than not, and that $44 billion will be put in play with one of these 7 facilities. I didn't mention the Paycheck Protection. I think I did. The lending facility, they're also backing up the Paycheck Protection Program facility, loans with that facility, and there's no amount stated in that term sheet. So Congress, being as busy as it is, they're not done, and for that, I'll go to my colleague Amanda Armstead.
Thanks, Greg. Hi, everyone. Good to be with you this afternoon. I'll kind of pick up on the Paycheck Protection Program, or PPP, where Greg left off there. As early as this morning, we actually had what I'm calling Phase 3A, for lack of a better term, fail in the Senate. And I'm sure many of you have already seen this news, but just to briefly recap, because of the demand for the Paycheck Protection Program, Treasury requested an additional approximately $250 billion for that program earlier this week. And so this morning, Senate Majority Leader McConnell attempted to get the Senate to authorize that extra funding under a procedure called unanimous consent, which wouldn't have required lawmakers to be here. As most of you probably know, Congress is in recess until at least the week of April 20th, and we can talk about that a little bit more later. 2 Senate Democrats objected to that unanimous consent request and tried to offer an amendment, which had 5 elements, and I'll go through those quickly. The first would be to authorize that $250 billion, but with some stipulations on how that money would flow, with half of it being designated to flow through smaller local lenders and other SBA programs. The second bucket would be an additional $100 billion for health provider relief. The third, additional funding for state, local, and tribal governments. The fourth, a 15% increase to the maximum SNAP benefit. And the fifth, modifications, to CARES Act state election assistance funding. So in terms of next steps for that extra $250 billion, at this point, it's anyone's guess. Leader McConnell was pretty vague after the votes failed this morning and said that we would just have to try again. So we'll continue to provide updates on what the next steps there would be. But had it passed the Senate, it's actually very unlikely that it would have passed the House, at least quickly. It's unlikely that the House would have been able to move it by unanimous consent, and so that would have required lawmakers, a quorum of lawmakers, to return to Washington, which would have been incredibly difficult, if not impossible. So again, next steps somewhat to be determined, but we should have some more information either later today or later this week and into next week. Beyond 3A, we are already talking and have been talking for several weeks now about Phase 4, which some, namely Speaker Pelosi, have dubbed CARES 2. Initially, there was a lot of discussion about Phase 4 being a very broad economic stimulus package to include things like billions, maybe even trillions of dollars in American infrastructure investment. Since then, the two sides seem to have come together a little bit more to look at this as an opportunity to extend and expand upon the CARES Act, hence the name CARES 2. So right now, this looks like it will include things like extending and expanding unemployment benefits, extending and expanding paid sick and family and medical leave, more funding for healthcare systems, more funding for states and localities, some of the things that Democrats included in their package this morning. And Leader McConnell has said that his #1 priority will be bolstering the healthcare system. So again, in terms of timing, like I said earlier, Congress is not scheduled to come back until April 20th, but there are some lawmakers who are expressing skepticism about coming back by that date, so stay tuned to see if that holds. The Democrats have said that they would like to move very quickly on Phase 4. The Republicans have taken a little bit more of a cautious approach, wanting to give some time for the CARES Act to be implemented. As Greg said, not all of the programs have actually been stood up yet, but we do expect to see some kind of action, at least at the earliest in late May, perhaps rolling into late April rolling into May. And before I hand it over to my colleague Ryan to talk a little bit more about some of the programs that Greg mentioned, I'll just say that once we have Phase 4, there's already talk about Phase 5. And so some of the things we've been hearing from our clients, both for what they're looking for to access programs in Phase 3, but also looking into 4, 5, and maybe even beyond. Of course, loans for companies of all different sizes. On the immigration front, there's a lot of uncertainty about visas and overstays due to travel restrictions. There are industries who are interested in industry-specific relief or stimulus, similar to what the aviation industry has seen. And then, of course, there are a lot of folks who are interested in the distributing personal protective equipment, or PPE, to states and localities, and the interaction between governments and private industry there. So with that, I will turn it over to Ryan.
Thanks, Amanda. Appreciate it, and good afternoon to everybody. We wanted to drill down a little bit on what is in the CARES Act for businesses and employees as they kind of try to make their decision on how to move forward, what direct financial support's out there, what tax and debt provisions may help them weather the storm, and really kind of look at the expanded unemployment provisions that were in CARES Act. Obviously, that's geared to employees, but talking to a lot of businesses, this is obviously on the forefront of their mind when they're trying to decide how best to support their employees as they move through this difficult time. As Greg and Amanda mentioned, the CARES Act kind of has basically two large direct financial support mechanisms within it. $349 billion in what's supposed to be forgivable loans for smaller businesses. That's the 500 and under employee umbrella that we will talk about shortly. That's known as the PPP, the Paycheck Protection Program. And then the larger $500 billion for medium to large sized businesses. Largely that is the Main Street lending program that we will talk about a little bit more. As Greg mentioned, that program itself is just starting to get rolled out. We're starting to see some guidance from Treasury, and we're all working to digest that even as we go. And I will point out that there is a lot of stuff out there, especially with the PPP program at this point, but that continues to evolve. SBA continues to put out guidance. We just got some earlier on the 3rd. They have a facts and questions document that is updated almost daily on the Treasury website on the PPP program. So I would encourage everybody to continue to go back and look at some of those documents because they are live and they continue to be updated. on a daily basis as questions continue to grow about a lot of these programs. So to kind of drill down on the small business PPP program that's alive now for most of the people that can apply, it really tries to covers the small businesses that are 501c3 nonprofits. I want to emphasize this is 501c3 nonprofits. We get a lot of questions on whether or not other 501cs can apply for this. This is very specific to 501c3 nonprofits. Also, veterans organizations, tribes, self-employed individuals, sole proprietors, and independent contractors with less than 500 employees can apply for this PPP, or the applicable size standards for industry as provided by the SBA. To highlight that a little bit, this is somewhat overlooked, I think, when we're looking at this program. I would encourage everybody that's kind of around that 500 employee max to check your NAIC code. That's your North American Industry Classification System code. I think you can find that. Everybody should have that on your tax return as you file for businesses. There are some exceptions to SBA current classifications to businesses that have more than 500 employees. There's not many of them, but especially in the oil and gas industry, check out your code, because a few codes do highlight that you can be considered a small business if you have somewhere around 1,200 to 1,500 employees. So if your code already gives you a higher amount of employees or revenue, check that out, because you may be able to come under this umbrella even if you're over 500 employees. Now, the PPP counts all individuals employed on full-time, part-time, or other basis as an employee, as an aggregate in that 500. So even if you have a lot of part-time employees, they are an individual and they are counted towards that 500 employee cap. The bill did carve out basically one area for businesses that are in the accommodation or food services sector. Under the NAIC code 72, if your code starts with 72, you're allowed to count your 500 employees per physical location. So if you have 6, 10 more locations, but all of them are under 500 employees per location, you can still apply for this PPP. But that, again, is only for the accommodation and food services industry. Also, you'll want to check, and you probably would know this, if you are listed on the franchisee directory already for the SBA, then affiliation rules don't pull you into that 500 employee cap. Now, as far as what this program does, and we'll come back on to the eligibility and the affiliation a little bit later, which is a little bit more complex, where basically all the questions lie at this point, but basically the program would give you a loan equal to 250% of your average monthly payroll, and that payroll is judged as an average of what you paid back last year. Now, if you weren't in business last year, you can look at what you were paying from January to February of this year and use that as your calculation. So basically, you take your average employee monthly salary payroll and times it by 2.5, and then you'll get your loan amount. You can use the loan for several things, including, of course, payroll support, paid sick leave, medical leave, insurance premiums, but you also can use it for mortgage interest, rent, and utility payments. Now, the big kicker for this loan that everybody's very interested in is that it is fully forgiven if you use it for payroll costs, interest on mortgages, rent, and utilities. But as the demand of this program has been so high, SBA's come out and said, look, we want you to use at least 75% of the loan for payroll in order to be forgiven. So that has moved a little bit, but please be cognizant if you're going to use this loan in an 8-week period. The 8-week period is the very important period of when you have to spend that money to get it forgiven. If you use that at least on 75% of your payroll, you can start getting that loan forgiven. Now, if you start laying off people more than 70, if you lay off more than 25% of your employees during that 8-week period, you're going to start losing the forgiveness of that loan. So anything below 75% retention, you're going to start losing a pro rata amount of your loan forgiveness capability. Now, the loan itself, all payments and interest will be deferred for 6 months. Nice, coming up front. You don't have to have any collateral or personal guarantees to get it. You're not going to be charged any fees for it. And now this is live right now, even though it's a little bumpy. Some banks are treating this a little bit differently, but the program itself went live on April 3rd for small businesses and sole proprietorships. Now, tomorrow, April 10th, independent contractors and self-employed individuals can start applying for the program. It's really not much on the basis to get in, to be eligible up front. All you need to do is be in operation by February 15th, 2020, assuming everybody would qualify for that. You had employees that you paid salaries, not a high bar, and you basically have to make a good faith certification that the loan is necessary due to COVID-19, and that you'll retain workers to the best of your ability, and you will use it to pay lease and utility payments, etc., and that you're not going to receive any other funds from another SBA program. We mentioned it waives collateral and personal guarantees. Interest rate's attractive at 1%, and it's a 2-year term. And as we said, all payments will be deferred for 6 months. The real controversy and the thing that has created some of the most confusion on the PPP program is the calculation of the 500 employees. And that falls under what SBA calls its affiliation rules. Generally, SBA approaches them kind of more of an amorphous totality of the circumstances test, which caused a lot of confusion on who the 500 employees and how do you calculate that is. So SBA put out some new guidance on April 3rd, laying out basically 4 principles on how to determine whether or not another business or a sub-component of your business is an affiliation to be considered in the larger 500 employee cap. And this 4 elements kind of came out after immense pressure from not only the business community, but from Speaker Pelosi and Republican leader McCarthy, both obviously from California. And to be honest with you, I think their main goal was to try to figure out how to make this work, this PPP program work for venture capitalists. Went so far as McCarthy got off the phone with Secretary Mnuchin, called into a radio program and said he talked to Mnuchin, and venture capitals are going to be fixed, and they will be able to access the PPP program. And so he was very confident that this was going to be addressed. Well, then SBA came out with their 4 criteria here, and I think people largely consider the venture capitalists not taken care of to the extent that they wanted. And I'll point out right away that that is especially true for the private equity guys. And we've heard a lot of private equity concern, talking to a lot of our clients and others, that these affiliation criteria did not address that at all. And as Amanda mentioned, and Greg, there's a lot of work yet to be done on additional COVID bills, and the venture capitalists and the private equity guys are continuing to work to see if those subsequent bills can be shaped at all to fix, if you will, these affiliation rules. So just to kind of touch on the affiliation rules, they're very detailed, but you can find them on SBA's website. But basically, the SBA will look at an affiliation based on ownership. So if you are a majority owner that owns more than 50% of a business's voting equity, it will be an affiliate. Or if you have the power to control more than 50% of the voting equity, you will be an affiliate. Now, if there's no individual entities found to be in control, the SBA will deem the board of directors or the CEO to be in control of the affiliates. Even if you're a minority shareholder, the SBA said that if you have by charter, bylaws, or shareholders agreement an ability to prevent a quorum, you can still be an affiliate. Now, SBA came out and clarified that if you give this up, if you irrevocably give this up, then you are no longer considered an affiliate. So it does allow you some way out there. Then it went through some affiliations rising under stock options. For example, if you have an option to have a stock option or a convertible security, an agreement to merge, SBA will consider that as a present ability to merge and will basically treat such options as deemed and exercised. So you're an affiliate. Flip side, if you have a letter of intent and you just have something where you're negotiating toward the possibility of a merger or sale of stock at some later date, that's not considered an agreement in principle and will not be given current effect. And basically the same thing with an appearance of termination of control. If you can terminate, but you have not, SBA will consider the fact that you have not terminated, and then you are still an affiliate. Based on your more traditional management agreements, affiliation arises when the CEO or the president also controls the management of the other facilities or other businesses. Whether or not a board, if a board controls the other companies, then affiliation arises, or even if you have a management agreement, affiliation arises. Last point there was the affiliation based on identity of interest. That's really kind of focused towards whether or not an interest exists between close relatives with an identical or substantively identical business or economic interest. So those are what the SBA put out on April 3rd. Still a lot of confusion and concern about those, and I am sure the SBA will continue to update their interpretation of those, and I wouldn't be surprised, as Greg and Amanda point out, that this continues to be a point of discussion in the future's COVID bills. So that's generally the smaller PPP program. Greg mentioned there's another program that is about $454 billion in loans and guarantees for other eligible businesses that have not received economic relief under the CARES Act. One of the big programs is the Main Street Lending Program. That's going to be focused on companies with between 500 and 10,000 employees. Of course, the big thing here is this loan is not forgivable like the PPP program. But there are some good incentives where the interest cannot exceed 2%, no principal interest payments within 6 months. But there are strings attached to this program that I think anybody looking at it needs to be cognizant of and think about if they apply for it. The funds, if you do get it, are required to be used to maintain at least 90% of your workforce at full compensation and benefits through the end of September. And then you should say that you have an intent to restore 90% of your workforce as it existed on February 1st, after or within 4 months after this public health emergency is over. To get the loan, you have to have a significant operation and majority of your employees in the United States. You cannot outsource or offshore jobs for more than 2 years. You cannot pay dividends with respect to common stock during the life of the loans, and this we've heard is a real issue for, of course, REITs. You cannot repurchase stock during the life of the loan, and you cannot abrogate existing collective bargaining agreements for 2 years after the loan, and you must remain neutral in any union organization efforts during the term of the loan. And you also can't be in bankruptcy. So that's the program that is just being stood up now. We're going to be continuing to look at that and as Greg points out, review what Treasury just put out today. I'll just try to hit some tax and unemployment provisions in the CARES Act that might be beneficial and of interest to businesses. Obviously, one of the big ones was it delays the payment of your employer payroll taxes. So this is will allow you to defer payment of all your employment tax with respect to your employees for the remainder of this calendar year, and it'll allow you to defer that for a 2-year period. It changes some tax reform limits on net operating loss. So it'll now allow businesses to carry back your net operating losses generated in 18, 19, and 20 back for 5 years. It also changed some of the tax law from the reform law to allow taxpayers to deduct a net pass-through business loss in excess of $250,000 or $500,000 for a joint return. So that you can do that now for 18, 19, and 2020. They also temporarily fixed the retail glitch that I'm sure many have heard about. This allows businesses to immediately deduct the costs associated with improving non-residential real property instead of being able to or required to amortize it over a 39-year life of the building. Another thing that I think people have found helpful is this new refundable employee retention tax credit. So instead of laying people off or taking loans, one of the things, there's an incentive to keep employees on the payroll, and I think we may see this expanded down the road, where it gives a business a maximum credit of $5,000 per employee to keep somebody on the payroll. So it creates this refundable payroll tax credit for 50% of the eligible wages up to $10,000, which is $5,000. If you were fully or partly suspended as a result of COVID-19, or your gross receipts declined by more than 50% because of COVID-19. Now, it breaks down a little bit different for employers with more than 100 employees. That you can only take this credit for people that you're paying on payroll that are not providing services during COVID-19. For employers with fewer than 100 full-time employees, and you get to take this credit regardless of whether or not they're working during the shutdown. Another nice thing they try to do for student debt is another incentive. Employers can provide a student loan payment program on a tax-free basis. So basically, employer may now contribute up to $5,250 annually, and the student or the employee that has a student loan will not have to pay taxes on that. One of the things I should have mentioned on the refundable employee tax credit, IRS came out with SBA and said if you do take this, though that cannot be combined with the PPP program, and don't want you to double dip on receiving basically wages, forgivable loans, and taking that tax credit. The other thing that was in the earlier bill, but there is a refundable tax credit for COVID sick and family leave that was under the Families First CARE Act, passed in early March. As you know, required companies under 500 employees to give 80 hours of sick leave and additional family leave. So that anything you pay there is a fully refundable tax credit at this point. Now, just want to touch base on the unemployment benefits. Trying to figure out how to handle or float your employees. One of the things to consider, of course, the big ticket item is the expanded unemployment compensation benefit rates. The CARES Act provided an additional $600 per week for anybody that goes on unemployment for 4 months. So since the time the bill is passed through basically July, they'll get an additional $600 per week. And it extended the unemployment time from 26 weeks, which the state typically runs, for an additional 13 weeks. The feds will pick that up. So now unemployment will go through December 31st if somebody's laid off, with the $600 per week going for the first 4 months. And yes, you can earn more on unemployment than you do working sometimes, given the $600 per week. So that was an issue, of course, during debate. And the question we get quite a bit yet is that really how it played out? Yes, you can get more unemployment for lower wage workers than you would if they did work. Of course, not only the amount of money expanded for what you can receive unemployment benefits expanded, now you can receive unemployment for a variety of issues, including taking care of a family member, getting diagnosed, taking off time because of school, etc. The unemployment also waived or got rid of some states' waiting period. Some states have a full week waiting period before you can get compensation for unemployment. That's waived. You should be able to get it right away. Another confusing provision, but everybody's trying to work through, is they allowed companies and states to get together and provide a short-term compensation program that allows basically the company and state to make up reduced hours to try to get the employee back up to 100%. And it allows employees who are laid off by or after March 1st to have the access to the paid family and medical leave that you would have otherwise after the FFCR bill was passed. As I mentioned, you can receive an advanced tax credit at the back end, or receive an advanced tax credit versus having to wait till your taxes are paid in order to receive the benefits of that paid and sick leave payments. So I know that's a lot, and as mentioned, we're still going through a lot of this, and SBA is still updating it, but that's hopefully kind of a high-level discussion about some of the liquidity and tax provisions that are in the CARES Act. With that, I'll turn it over to Scott.
Hey, thanks, Ryan. Good afternoon, everyone. Our national practice team has worked with a number of companies since the outbreak on compliance with governor's shelter-in-place orders while helping them maintain operations amid closures of these non-essential businesses across the country. We've done this in both Republican and Democratic states and in states outside of our McGuire-Woods footprint. And these orders have created a great amount of ambiguity among the business community as often these orders are not alike. Some clients are clearly essential, and some are essential to the supply chain of an essential company. And an example of that is an aluminum extrusion plant that we have helped maintain operations around the country. So there are three main pieces to the work we've done with these types of companies who are looking to receive advice among these non-essential business closures. First, we monitor and interpret governor's executive orders. This requires quick action when governors call these shelters in place because usually you only have about 48 hours to comply. Second, we leverage as our national practice our 50-state network of relationships to reach out to administration contacts. We receive background and advice, and in some cases receive assurance from that governor's office that this company that we're working with is in fact essential to the supply chain, manufacturing, etc. And third, we provide a legal letter assuring the company that they have read the guidelines correctly of that executive order. And in best cases, we'll insert language we've received from governor's offices, our outreach there, in that letter so that they can have that in the letter that they put in their stack of COVID-19 related documents. So at this point, all but 8 states have ordered a statewide shelter. That's as of today. However, we can still work with these companies and states that have already ordered such closures to ensure they're interpreting the order correctly, communicate with state-level officials to receive background advice, in some cases assurances, as I mentioned, and we can still provide a legal letter for these companies to add to their stack of documents related to operations ongoing during the virus. So that's a bit of an overview of how we've helped advise clients in the national landscape of COVID-19, and I'm going to turn it over to Ginny Boland to advise on messaging your response to the virus.
Thanks, Scott. Hi, everyone. As a communicator, what I and my colleagues have come to know and share with our clients is that there really isn't a playbook for how to best communicate during the pandemic. That said, there are several communications principles that can and should be applied as businesses navigate their way, and I'll cover those briefly now. The first of these is setting expectations with those you are communicating with. I'm sure your email inbox has been inundated with notices from every business you've ever shared your contact information with. They're talking about how they're navigating through the crisis. And yes, recognizing and acknowledging the crisis is certainly the right thing to do and to communicate with those who are key to your business. However, we're telling clients not to over-communicate to the point that your audience tunes you out. We're talking to clients about setting schedules for when you will update your audience and then letting them know that, and that you'll be in touch once something new arises or as you learn more information. Also, if you're in a situation where your business is having to provide frequent communications, either because things are rapidly developing or because your audience is asking for more information, you may want to consider numbering the communications so your audience knows what is the latest. We have a client who's had to report positive cases of the virus when they occur to an extended audience. So keeping the style of the communication and numbering those communications helps audiences understand the sequencing of the rapidly unfolding situation. So setting expectations and staying consistent with your style and your timing. The next principle is seizing opportunities. These uncertain times can be a real opportunity to generate positive press for your organization. When you read the news or watch the news on TV, you'll notice the majority of it is COVID related. So reporters are looking for new angles to cover. We've helped clients seize this opportunity to share what their organization is doing to help. A note of caution, it's important not to let the pitch to the reporter come off as overly self-serving because that could backfire. But if your company is doing something meaningful, it's a good time to promote that. On the flip side, given how heavily the media is focused on COVID, you could argue this is an ideal time for any negative news that's non-COVID related to potentially fly under the radar. If you know something negative unrelated to COVID may be revealed, you could avoid more significant reputational damage talking about it now when compared to a lighter news time when reporters may not pick up on it. And related to seizing opportunities, what my colleagues and I have uncovered is that, interestingly, this pandemic has opened the window into competitors' ways of doing business, whereas policies and procedures may have been shrouded with secrecy or only shared internally. With this pandemic, companies are talking, and they're talking in a public arena about what they're doing. Whether it's employee pay rates or other operational details, it's a good time to really examine what your competitors are doing. How are they doing it? What are they saying about it? A few weeks ago, we conducted an audit for a client in the senior living industry to see what their competitors were doing and saying on their websites about their business operations during COVID. So this idea of assessing and gaining competitive intelligence is something that all businesses can be thinking about during a time where lots of businesses are communicating in a public manner. Last, I'll cover the principle of tailoring your message. Communicators will tell you that you need to hone your message and stay on that message, and that's true. That said, consider your audience. In a crisis, your employees are going to want to hear a different message than maybe your customers will want to hear. One may want to know about job security. One may want to know about safety measures in place to protect supply or product. So your communications should have an overarching theme, whether that's concern and caution, but you'll also want to tweak your messaging based on what each stakeholder is going to want to hear from you. Also, there should be variety in your language so that communications don't all look the same. There's only so many ways we can say we're all in this together. So communicators are looking for ways to share those same sentiments but with different words. And people are really looking for human recognition and empathy right now. So we would advise from any kind of cookie cutter template. So the lesson here is tailoring your message and doing so with authenticity. I'll just conclude by saying that the communications team here at McGuire Woods Consulting has been helping a variety of clients as they navigate their own communications through this crisis. From senior living to food and beverage to nonprofit, we're helping reactively and proactively. Tactics like crafting messaging, setting protocols on what to do when a reporter calls, who takes that call, who works with the reporter, developing statements and answering questions for reporters, serving as a spokesperson, and then developing communications that are specific to customers and employees. These are all the kinds of things that we're doing to help our clients over the past couple of weeks, and we've applied all these communications principles that I just reviewed with you today. I'm happy to answer any questions once we get to that point. Governor Hodges, that's it from me, so I'll turn it to you for procurement.
Jenny, thanks for the great job on that. I'm going to try to deal with procurement issues in about 2 minutes because we want to open up the balance of the time for questions from all of you regarding any of these topics that have been covered. And just to remind you, there is a device where you can send your questions in to the group, and we will try to have the best person answer it. I do a lot of work in my practice around advising businesses that sell things, goods or services, to state governments around the country, to local governments, and to the federal government. So we have a short section on procurement. There's some people on the call that have an interest in that, and I'll run quickly through this. First is just to remind you that because of the nature of this crisis, many of the traditional procurement rules have been suspended, and purchases are operating under emergency orders and emergency rules. So it's a different game for people who've not been engaged in this and how these goods and services are being procured. The one area where you will see a lot of activity in the right now and in the coming months is in surge services for governments. A great example is with all these unemployment claims that are coming in, state governments do not have the capacity to handle those. So things like call centers and services around trying to assist state entities that deal with unemployment claims, that's a big area of acquisition right now by government entities. Temporary beds in facilities. Many governments are in the process now of acquiring facilities or leasing facilities and acquiring temporary beds in the event that they need extra bed spaces in their healthcare system to deal with COVID patients. And we're seeing a lot of activity at the state level in particular, trying to locate facilities that can be leased for a short term. And often what they're doing is telling vendors, we need a turnkey job where you can come in and upgrade the facilities quickly, get it ready for what we need, put linens in, provide food service, and commit to do that for a period of time. All of that is being acquired on a temporary basis, and most all of it is being acquired through state emergency management entities around the country. A quick word on personal protection devices that you read a lot about, and we have seen clients, and you will see people who, and some of you, may be offering those services to state governments and to private vendors like healthcare systems and the like. There are a couple of important things to note about the things like ventilators, gloves, masks, is there are many people who are offering these services, and the questions that government entities will have about those are, first, where are these materials coming from? Do they meet certification standards? Can you, as someone who's proposing services to us, verify that these materials comply with these standards, and can you verify that these materials can be delivered on time? Those are very important questions, and if you are in this business of offering to sell to state and local entities and to private systems, they've got to be assured that these materials meet the quality standards standards, that that you can deliver what you promise and you can deliver it on time. And we frequently are advising clients on that, and frequently hearing from government entities about their frustration regarding clients regarding proposers who are not able to provide that sort of certainty around those issues. And last but not least is these government entities are all ears when it comes to ideas in the health arena, like testing. If someone indeed has a testing program that is meeting FDA approval and moving along very well, they want to hear about that because they're all worried about the next pandemic and also dealing with the current issues that they have. And likewise, ideas to better prepare for future pandemics. There are plenty of great things going on out there that public health agencies in particular are interested in hearing about that might better prepare them for the next pandemic. Those are a few things in the procurement space. I'm happy to answer any specific questions you might have, but I think it's better for our last 10 minutes or so to turn the floor over to all of you to ask any questions that you might have about presentations that occurred today. Any questions? All right, I do not see any on the screen yet. Kara, do you see any?
Yeah, it looks like we had one come in. I'll read it out for you. Will skilled nursing facilities be getting dedicated relief funding as senior care centers are on the front line? A Virginia congressional delegation has requested this. Are other states also requesting this?
Who wants to take that?
Well, this is Greg Walden. Because the focus, the Democrats have, and I think this is the Republicans have agreed with this as well, the focus of a future package would include support for the healthcare sector, that it would be natural for skilled nursing facilities to be given some relief in that program. So there are a number of industries that will be critical to the recovery of the economy. But in terms of what needs to happen right now is to bolster our healthcare system as much as possible, and that includes skilled nursing facilities.
There is a question from Ashley Groom in our Atlanta office. Will this be recorded for sharing? Kara, I believe the answer is yes to that.
That's correct. All registered attendees will receive an email with a recording of this webinar tomorrow.
Yes, we've had several questions around that, including the slides that are here.
Correct.
Do we have any other questions? Let me just say, if we don't, certainly you have seen the list of people who spoke today. If you have any, please feel free to send us an email, ask a question. We'll try to get you an answer if we can to see that the questions are responded to. This is a fast-moving target both at the federal and the state level, and we understand how difficult it is to follow all these things. And we thought today's seminar would be helpful because we're fielding lots of questions about measures, and sometimes the information that people have is a little bit dated, and this enables you to get these kind of questions answered. Ty Davenport has just sent a question in. Any relief for local governments? Ty, based on lost revenues? Team at the federal level. Yeah.
Yeah, it's Amanda. I can start, and then others may want to chime in. So yes, that was part of the proposal that Senate Democrats put forth this morning. So we do expect that they will include or make a strong push for more funding for state and local governments in if we do have a sort of 3A, or definitely in phase 4 and potentially even beyond. But yes, that's definitely a priority for Democrats, and I think something where there could be some bipartisan agreement.
There is a municipal liquidity facility that was stood up this morning, and that will cover all 50 states and the District of Columbia.
Yeah, so many local governments rely upon not just property taxes but sales tax revenues. So I can imagine that Ty, in Fairfield County, South Carolina, where you are, I can imagine that you all have been slammed by loss of sales tax revenues for infrastructure needs and others. So I'm sure that's going to be a debate as well in the state legislature about what to do with aid to subdivisions. Any other questions? Okay, I don't see any others coming in, so I'm going to adjourn the meeting now, and again remind you that if you have any specific questions that come up, both about this presentation or about any of these issues, feel free to get in touch with us. We're more than happy to try to see if we can help you resolve those issues, and likewise you will be receiving from us information tomorrow morning with the details of this presentation. Feel free to share those with anyone who may be interested and some of the things that came up today. Thank you to the presenters, my colleagues at McGuire Woods Consulting, and to our audience. We appreciate your participating today.